Activities that can surprisingly ruin your credit score. Even though building a good credit score takes a while, you can ruin it in the blink of an eye. All it typically takes is a bit of overspending and sometimes a few missed payments, and your credit score can be damaged for the next few years. And in this video, we will be looking at the top things you should avoid doing. Hey guys, welcome back to our channel. We compile the latest business world news for you to keep up to date with. Our videos are guaranteed to keep you coming back for more insightful and amazing content. So make sure to like, comment, and subscribe to the channel so you are always up to date with our latest videos as soon as they are uploaded. And so, without further ado, let's start with today's video. Not protecting your personal information. Many credit card users become victims of identity theft as someone they knew and trusted opened accounts in their name. So, you need to keep your personal information safe to avoid anyone from getting access to your accounts, or even when opening a new account in your name. And this private information includes your credit card numbers, bank account, and especially your social security number. Opening an account without a stable job. Many credit card users are required to ask for your monthly income before approving you for a credit card. But they don't always ask for proof of income or the amount of time you have been employed. And before you get a credit card, make sure you have a consistent income to make your monthly payments. Without a steady monthly income, you may not be able to make your monthly credit card payments, which could result in missing out on your payments and hurt your credit score. Applying for a lot of credit. When a lender or even a creditor accesses your annual credit card reports in response to an application for credit, it concludes in a hard inquiry. Also, the hard inquiries can impact credit scores. When you are applying for a number of credit accounts in a short time, it may affect your credit scores and cause lenders to see you as a higher-risk borrower. And in addition, some credit scoring models may consider your recent credit activity. Suppose you are shopping for an auto or mortgage loan or a new utility provider. In that case, the multiple inquiries for that purpose are generally counted as one inquiry for a given period of time. This allows you to check different lenders and also find the best loan terms. So, it is very important to know that this exception generally doesn't apply to other types of loans, such as credit cards. Letting someone use your credit card. Unless someone steals your credit card, you are mainly responsible for any purchases made on your card. So, if you let your family member borrow your card for pizza and she maxes it out on clothes and shoes, you are responsible for the balance, whether you can afford it or not. And the same goes for adding authorized users to your account as well. So, if they are going to have a physical credit card, make sure they are responsible borrowers. Cosigning for someone. Co-signing a credit card or a loan sometimes seems like the right thing to do at the time. If you want to help out your loved one, however, you are putting a lot on the line for that person. Too frequently, the person you co-signed for goes rogue, does not make the payments, and leaves your credit in shambles. Remember that co-signing means you are accepting responsibility if the other person does not pay. So, you must always be ready to step in and assume payments if you want to protect your credit. Opening a credit card before you are ready. While you can kind of get a credit card at the age of 18, being of age does not mean you are officially ready for a credit card. And long before you apply for your first credit card, you should have some financial basics in place. You should have the ability to handle a checking account without making overdrafts, make yourself deadlines without being told, as well as have good money management skills. And without some basic financial skills, you are at risk of ruining your credit before you get to use it. Having debt-to-credit utilization ratio. Your debt-to-credit utilization ratio is another major factor used to calculate your credit scores. This ratio is how much of your available credit you are using compared to the total amount available to you. Lenders, as well as creditors, usually prefer to see a lower debt-to-credit ratio. So, opening new accounts solely to reduce your debt-to-credit ratio is typically never a good idea. That can potentially affect your credit scores in two ways. The hard inquiries resulting from those applications, more about hard questions below, and the new accounts themselves may lower the average age of your credit accounts. So, it is best to only apply for the credit you need when you need it. Stopping your credit-related activities for a long time. If you have not used your credit accounts for months and your lenders and creditors have reported no new information to credit bureaus, it potentially might make it more difficult for lenders and creditors to evaluate your application for credit or the services. Furthermore, after a period of time that varies depending on the lender or creditor's policies, your card account might be considered inactive and closed by the lender. That, in turn, might affect the credit card scores in the same ways as if you had closed the account. And if you want to keep the account active, you might want to consider using it responsibly after every few months, if only for all small purchases or putting a small recurring charge on the card. Ignoring due bills. If you ignore a past due bill for any sort of reason, the company will no doubt come after you for payment. They will call you and send letters for a few months to attempt to get you caught up. If that fails, they will try to get the debt collectors involved. And once a debt collector takes over the account, and then they will add the delinquency to your credit card report, which will hurt your credit as well as the ability to have applications approved in the future. Also, your payment history on loan and credit accounts can play a prominent role in calculating credit scores, which depends on the scoring model used. Even one late payment on a credit card account or even a loan can result in a decrease. Moreover, late payments remain on your Equifax credit report for 7 years, so it is always best to pay your bills on time, every time. Having too many credit cards at once. Opening up several credit cards in short periods is sometimes seen as a symptom of a bigger spending problem, which can lead to unaffordable balances and late payments. And aside from putting yourself at risk of overspending, as well as opening up too many credit cards at once is a red flag to lenders, as it seems as if you are desperate for some credit. The credit inquiries account for around 10% of your credit score. Every time you apply for a credit card, then you will get a hard inquiry, and then your score will drop slowly. While your credit score is very important in getting approved for loans and getting the best interest rates, so you do not need to obsess over the scoring guidelines to have the kind of score that your lenders want to see. And in general, if you manage your credit responsibly, and as a result, your score will shine. And, as you can see, the most prominent hits to your credit score come from the measures you have to take to look for yourself out of major debt. However, even if those corrections are designed to get you back on track, and if you can avoid the big issues at the top of this list and always keep your eye on the much more manageable bottom half, you can keep on focusing on building your credit. And always remember, good credit is where the opportunities begin. Well guys, that is all we have for you today. What are your thoughts on this? Which one do you think is the most helpful? Get involved and let us know in the comments section down below. If you enjoyed today's episode and found it interesting, then make sure to leave us a thumbs up, and do not forget to subscribe to our channel and click on the bell icon to be always up to date with the most exciting content as soon as it's uploaded. Thanks for watching. See you again soon in another video.